day progresses. But on that note, let me also bring on board our next guest for today. Joining me, Siddarth Bhamre, Institutional Research Head at Asit Mehta Investment Intermediates, joining in to talk about what has really changed, in the insurance space that they have turned bullish on this particular space. Siddarth, great to have you on the show. Always a pleasure interacting with you. The growth in the insurance space has been fairly sluggish in FY24. There have been regulatory changes as well. But what has led to the underperformance of this space over the last 2 to 3 years? If you could take us through that.
Good morning, Nandita. Always a pleasure to be part of your show. Insurance, if you see, last 3 years have been a sector which has significantly underperformed, despite market has done pretty well and so much of money flowing into equity. And predominantly, the COVID impact, which can be the case. And also, in budget 2023, there was an announcement which led to significant underperformance. And that announcement was that any policies where premium is above 5 lakhs, the surrender value would be taxed in the hand of investors at the tax slab, which led to significant change in product mix, where more traction started happening in ULIP compared to par and non-par products, where the margins for the industry were higher in a range of 35-40%, and ULIP margins were around 10-15%. So the entire dynamics were changing, where growth was slightly tepid, and the product margins or the overall margins were shifting on a downward trajectory. Even if you look at, recently, as we had seen that the cap on the commission structure had been removed, but the murmurs of the same were happening since 2-3 quarters before that. So these were few factors: tepid growth, COVID impact, change in product mix, which led to decline in margin, led to significant underperformance by insurance space.
Right. But now what has changed for you at Asit Mehta to think that this underperformance is out of the way? Has the tide really turned?
There are two things. Firstly, that industry is adapting well now to the new business dynamics, new margin play. And we are also seeing, the growth rate slightly coming back. If you look at the CAGR rate for, last 5 years, it was around 14%. And now last 3 years CAGR growth for AP, annual premium equivalent, which is, the new premium and the first year premium is taken off the policy. There we are seeing significant growth rate. We are seeing that companies are adapting well to the changing dynamics, and also very importantly, Nandita, that valuations have now become attractive. Some of the names which were trading at above 4.5 times price to EV, embedded value for insurance space, that's the metrics which you see. They are now available around 2.3. We are seeing that the adoption is pretty much naturally, companies are getting adapted to all these things, and markets have been doing well. Money is flowing more into the ULIP products. So all in all, valuations, adoptions, diversified product mix, diversified distribution channel of companies are suggesting that now, after 3 years of underperformance, this is the space which cannot be ignored, and one should take exposure over here, and that's what is making us bullish.
Right, and within the insurance space, any preferred picks and the rationale behind it?
Well, we are optimistic on private space as such. Needless to mention, the management is better over there. But one of the names which I would like to first is SBI Life. And Nandita, here the margins, the VNB margins which are called, they are highest and they are going fastest at 23%. It has a very good distribution mix. It has good amount of premiums flowing in through its banker channel. It has agents in deep in 3-tier cities as well. And the cost of mobilization of premium is also one of the lowest. and it is one of the fastest growing company. It's available at around two times price to embedded value, near to HDFC Life, but it commands premium now, unlike before, because of the metrics, favorable metrics. And we believe this is one of our top pick, and it offers decent upside from here. You can see that stock currently trading around 1645. We have target of around 2015 rupees over here, offering upside of around 20 to 23%. So that's the first stock which I want to talk about. ICICI Pro Life, that is also one of the name which I want to dwell upon. It is growing fastest in the group segment. There are two kind of policies, Nandita. One is individual, that is retail policy, and group policies, group insurance. In group insurance, ICICI Bank is growing fastest. It has highest amount of ticket size in terms of premium, which means that it has cream clients. Also, diversification of product mix. Earlier, it used to have around 80% of ULIP. Now, the ULIP is just 40% of the total product profile. Even on valuation perspective, it is quite cheap at this point of time, trading around two times price to EV, and our target price over there is around 893, offering around 16% return. Same goes with HDFC Life. There too, after recent correction, quite attractively, stock is valued. It used to trade around 4.5 times price to EV. It has corrected significantly. It's now trading around 2.3. Interestingly, despite all the challenges which company has seen in recent past, it has maintained its VNB margin, which is noteworthy, and that also forms part of our preferred pick in insurance space.
But let's talk about LIC, the market leader, right? And it has corrected quite a bit, over 300 rupees off its 52-week highs as well, under 1,000 rupees at the current juncture. So looking at that, one would argue that it is, among the cheapest stocks in this space. But, you as a brokerage house has a hold rating on the stock and not a buy rating. Any particular reason behind that?
Yeah, so LIC is a mammoth of a stock, and of course, I appreciate that management has been saying that they are taking a lot of measures to increase the growth, change the product mix, and such. But we haven't seen the pace of it. We haven't seen it happening significantly on the ground, which will result into overall turnaround. We are not saying that we will never buy this stock as such, but right now it is available at price to EV of around zero point 0.7, and we believe it might remain there for quite some time. And reasons for that is it doesn't have a very diversified product mix. I mean to say that the number of products available today, increased financialization. People demand different kind of products which LIC doesn't offer. Even if you look at the distribution channel, which is a key metrics to see how premiums are collected. So it relies heavily on agency, that is a agent structure, which is not very cost effective, and it has the lowest ticket size, more of retail premiums coming in, which doesn't augur well. So not that these factors for LIC won't change, and not that we'll always remain hold on the stock, but right now the private spaces are offering better, risk-adjusted returns as far as investment is concerned. So LIC is old for us. Not that we don't have upside over here. We are seeing an upside in LIC to 1083, which is not very significant. It's that's the target we have for LIC. So all in all, we are optimistic on this space. It is quite possible, Nandita, that there might be couple of quarters where margins might stay at lower level or slightly correct, but it is in price. And as I always say in most of my interactions, that market will either give you a good story or will give you good valuation. And it seems like insurance space is right now available at, if not very attractive, then inexpensive valuation, and one should see it from a long-term perspective in its portfolio.
All right, that's the view on the insurance space. The tide may be turning, valuation attraction is there, and these are some of the stocks that Sid highlighted among his top picks. But with that, Siddarth, would like to thank you for taking out time and joining in this morning and sharing your thoughts with us. It's always a pleasure interacting with you, and I look forward to touch base with you and talk about other sectors, other stocks as well. But before I let you go, wishing you a very happy Diwali and a very prosperous year ahead.
I wish you the same, and all your team and viewers happy Diwali.
Thanks a lot. Well.